It's time for Real Talk with Brian and Dan, the weekly talk radio show dedicated to discussing important real estate topics, plus insight into the local community. With a combined experience of over 50 years as local real estate brokers from the East Side Real Estate Team at Keller Williams Realty Bellevue. Here's your hosts, Brian Levitt and Dan Edwards.
Hey, Brian, how's it going?
Going great, Dan. How are you?
Good. It looks like a fantastic spring. Are we in summer yet? When
Not quite.
Not quite.
Friday.
Friday. Okay.
21st.
Man, it has been fantastic. Well, folks, you're listening to Real Talk with Brian and Dan on 1150 KKNW. It is Wednesday, June 19th, 2019. We appreciate you listening to us today. Now, if you'd like to listen to any past episodes, you can find us on wherever podcasts are being podcasted, if that's the term for it. I don't know what they call it. But today we have another fantastic, great show lined up. You're going to have a great time. We're going to talk to Anna Cummins with Cummins Chiropractic and Tony Starr with Tony Starr Fitness. I've known these guys for quite some time. They're going to bring some great information that I know you'll benefit from. But first, it's time for some Real Talk. All right, so I pulled down the numbers for May 2019. We like to always take a look and see what the market's doing. Every month we dig into these numbers. And first off, King County, it showed another increase of inventory, about 62% and 57% on the east side. Brian, what does that mean for our buyers out there?
It means more selection, and it means a more balanced market. I think what we're going to see is a fabulous market, absolutely fabulous market for buyers because more selection and rates are so good. We're going to talk to Michael Burdick a little bit about that.
That's right.
No, it's a more balanced market, so it's good for both buyers and sellers.
Yeah, they're seeing more choice, and this is the second straight year where we started to see this increase of inventory year over year, and it really does allow for choices. They don't have to freak out, get in multiple offer situations. Now we still have a few, so just be aware that just because a home comes on the market, you know, what we're seeing, though, is people kind of back away when they see that there's that multiple offer situation. Right. They don't want to get caught up in it, so they kind of tend to back away from it. But the good news is more inventory. The interesting thing I noticed is in May is that pending sales were flat. So essentially the same amount of contracts went into, same amount of home buyers went into contract in May of 2018. So kind of a similar amount of activity. Yeah. But closed sales up 5.7% in King County and 13.81% on the east side. When I think of closed sales going up 13% and inventory going up, you know, what was it on the east side? 57%. Right. It seems like a pretty healthy market. It doesn't seem like it's outpacing. One's not outpacing the other. That's pretty good. So what does months of inventory mean, Brian?
It's just how much time it would take for all the homes on the market to sell. So
like if you never brought any new homes in a specific area, you'd be out of inventory in X amount of days.
That's right.
So that's how we gauge the heat of a market, right? Now, when we were in the thick of it in 2016 and 17, we were under a month of inventory, right? Right now, the balance of inventory is usually when we hit 4 to 5 months of inventory.
Right, and that low inventory really fuels a seller's market.
Right.
And so that was when you saw 10 offers on one of our listings. Right now, we're not seeing that. We're often, what I'm seeing right now is one good one. Yeah. And that's all it takes for a seller. And for a buyer, you know, what I see, you know, in multiple offers is fight or flight. Some people are willing to jump in and you know, put their bid in, and some people just run away.
Yeah, it depends on the house, right? And what we're telling sellers is to be compelling.
Right. You
know, if you can avoid something that maybe is deferred maintenance, if you can clean that up, freshen that up.
Have that home staged and prepared, and that's going to be a win every time.
All right, so what about the challenges that or myths? We talked last week about like some myths that people were thinking with those reality TV shows. This week we have time to kind of go over two myths that might be holding a buyer back. So what's the first one, Brian?
That you need 20% down to buy a home, which is completely untrue. I mean, FHA you're 3.5%, but even if you don't have that, if a qualifying buyer can get a grant. And I think we're going to have Michael talk about that a little bit. Down payment assistance, there's grants, there's zero down. So really, in fact, the number one objection I hear about why people don't own a home is down payment. And so
Yeah.
I think the biggest myth out there is that they need more than they think they need more.
Where
than
did
they
that come
actually
from?
do. I don't know. That's interesting. I don't know.
Yeah. It's funny because if
Listeners, call us on that one.
Yeah, we'd love to know where that came from. But one of the things that occurs to me is, in a falling market, if you don't have that equity, that cushion, right? Maybe that's where it came from, is people believe, well, we have to have this equity cushion just in case.
Right.
How about myth number 2?
Myth number 2, I need a 780 FICO score or higher to buy.
So this is an interesting one, is folks definitely are afraid of their, credit score, which I think it's great to be responsible with your credit.
Right.
One of the things that's important is a credit history is a credit history, and it just is what it is, right?
Right.
There are times where you made mistakes, did or didn't, or things happened in life. But the truth is, 23% of the loans that were originated, 23% were of a score of 700 to 750, okay? 18%, 650 to 669, and 9.4%, 600 to 650. So that's over 50% of the loans closed were of a credit score between 600 and 750.
Right.
So those are 2 myths that are busted here at this point. Yeah. All right.
So one comment on that, too, is sometimes I have clients that they ask me about credit repair, and I would say that credit repair itself is a myth. There's things you can do to better your scores, especially if there's an error. So checking your credit report. Everyone is entitled to a free annual credit report, which you can obtain online. If they ask for money, that's not the free annual one. But checking your credit report to make sure it's accurate. If there's an error, that can be corrected. But paying for a credit repair service is a waste of money. It doesn't work that way.
Yeah.
There are some tools. An example is Rapid Rescore, where you can move various obligations around and increase scores, as an example.
Yeah, it's about debt to income ratio.
Right.
And one of the things that I think is the most common is if you are over 33% on that line of credit, that will adversely affect it. So if, let's say you have a $1,000 credit card, if you're sitting at $500 on that credit card, all you got to do is pay $200 and you're going to be below that 30%. And that's going to help improve
It'll
it.
Bump your scores.
And it's going to take 30 days. So you pay it down and boom, that's going to help bump your score. So I'm sure you can speak with any one of our featured loan professionals. You're going to find yourself in a great situation. So,
right.
All right. Well, the break is coming right up. So after the break, we're going to hear from Michael Burdick at Loan Depot with our mortgage moment. So come right back.
Did you know when you pay rent, you're actually paying someone else's mortgage? Are you tired of missing out on owning your own home? Fact: homeowners on average have 40 times the financial net worth of renters. The Eastside Real Estate Team has been helping many first-time home buyers find and buy their first home. They specialize in customer service and put you first. They listen first to what you're looking for, and then they take the time to make sure their clients understand every aspect of the home buying process. If owning a home has been your dream, the Eastside Real Estate Team can help you. For a free, no-hassle consultation, call 425-200-4093 or find them online at the eastsiderealestateteam.com, a subsidiary of Keller Williams Realty in Bellevue.
Bringing good vibes to the Puget Sound and the world. Alternative Talk 1150.
Welcome back to Real Talk with Brian and Dan. I'm Dan.
I'm Brian.
And we have the mortgage moment. That was a really quick break now that I think about it. Michael Burdick, you're on the line. How you doing, bud?
Doing great. How are you guys doing today?
Good. Anything fun this weekend for Father's Day? I know you're a father.
Just spent time with the family. It was great.
Nice.
Good weather. Yeah. So.
Nice. All right, so let's get right to it. Let's talk about loan types. There's a ton of different loan types. We were talking in the earlier segment, FHA, jumbo, conventional, all that stuff. What are the different requirements?
Well, people always ask me, what my rate is, what are my requirements for down payment, and really when you sit down with a mortgage professional and you do an application or you're just talking to them getting pre-qualified, we can really then narrow down which options are going to be best for that particular person. And a lot of it depends on their whole finances. Are they selling a home? Are they a move-up buyer? Are they a first-time home buyer that may have excellent credit but just hasn't been able to save up a down payment? So once we figure out their situation, we can put them in the correct bucket and from, let me just go down the line. With an FHA loan, that's going to be somebody that doesn't have a large down payment and may have had some credit challenges. It's a great loan. It's not a bad loan. It's just you're going to get better terms on your mortgage if you are that buyer profile. If you have more to put down, or let's say excellent credit, we'll probably put you in a conventional loan. And then it gets even a little more complex from there. I'm sorry.
Yeah. So between those two, depending on the buyer profile, the conventional could actually cost less in the long run. Does that sound? Am I answering that correctly or no?
It could if you fit the profile for conventional. So if your credit score is lower, an FHA loan is going to be a better deal for you because the mortgage insurance would be higher on a conventional loan. So there's a balancing act to figure out what the best deal is for the person, and sometimes they're not comfortable with the payment that we can offer them and what we can qualify them for. So that's really part of the pre-approval process, is understanding your options. To get a little more complex, and really another deciding factor is price range. So conventional FHA have buckets, and then if you exceed those loan amounts, you go into what's called a jumbo loan, where basically it's the same thing as a conventional loan, but you're borrowing more money. So the guidelines get a little more strict as far as your credit history, employment history, and then they want to make sure you have a little money left over just in case something happens. And rightfully so. If you're borrowing more money from a bank or a mortgage company, they want to make sure that you are financially set up to handle that payment.
So, Michael, tell me about how you work with buyers that are down payment challenged, little or no down payment, but say good credit scores, for example. What options might be out there for that buyer?
I see buyers like this all the time, and it's not that they're irresponsible or not good with their money. Maybe they're in their 20s, millennials, or been paying a high rent in Seattle because that's where their job is, and they've never missed a bill in their life. I've seen these clients with credit scores in the high sevens, but they just can't save a down payment. So, there's programs set up for people like this because they are responsible.
Yeah, give us an example.
So you can either get a down payment assistance through a Washington State Housing Finance Commission, which gives you a 4% bond that you pay back if you ever sell or refinance, but it allows you to get into that home. And then another program is Fannie Mae Home Ready, which is a Fannie Mae program that will give somebody better terms on their mortgage, even if they only have 3% down. So they get the terms of somebody that's putting 20% down, just with less rate adjusters. So that's a program where it is income. You do income qualify, so they're not going to give you those benefits if you make lots of money.
Yeah.
But the King County limit is $103,000 right now, so there's some good wiggle room there.
That's maximum
that's
income.
Another great program.
Income limit. The 103?
Yep.
Yeah, okay.
Okay. So, Michael, we don't have time for a lot of the other stuff that we were going to talk about today. So just give me, in a nutshell, how long does it take to close a mortgage transaction from start to finish?
That's an excellent question, and, it's something that we like to try to streamline as much as possible by preparing someone before they make an offer. But the typical escrow cycle that's going to make you competitive is 30 days. Now, we can speed that up if all the stars align and we have, we've done our homework before making that offer. But that's typically what we shoot for. I've closed loans in as quick as a couple weeks, but really have to get, some lucky stuff on our side with appraisal and things like that.
Right. I know that some of our transactions we've had you close in 3 weeks. When we had a totally pre-underwritten borrower, they had already done all their homework, got all the paperwork to you that you needed, and all we did is show up with a purchase and sale contract, and appraisal was completed quickly so that it could go to underwriting, because that underwriting process can take about 2 weeks even if you're hurrying, right?
Yeah, once we get under contract, if we've taken care of all the borrower-related items, then we're just dealing with property-specific stuff. So, setting up title and escrow, getting appraisal. Now that we have appraisal waivers coming back, I'm going to see, we're going to be able to speed things up in the right situation. So, but yeah.
Yeah. All right. Well, Michael, that's all the time we have. So I do appreciate. Now, our listeners know by now you can Google Michael Burdick at Loan Depot. You're going to find all the information you need to download his app, install the app, go ahead and apply online, give us a call. If you have questions for any mortgage-related things, go ahead and send them to our show, radio@the Eastside Real Estate Team, and we'll put those questions to Michael and our other mortgage partners. So now it's time for our break. When we come back from our break, we'll be talking to Anna Cummins of Cummins Chiropractic. Join us in a few short moments.